Hey folks, Dan Frio here, the rate update. Today is March 11th, 2021. I don't say the date today. I had a couple of people say, Dan, don't know what date it is. It was yesterday. So let's get to it. What happened to the rates today? And I got I got good news, no news, and some news for those with rental incomes and second homes. Don't go away. We'll be right back. Okay, well, it looks like the stimulus package is signed, and they're saying the checks will be out by the weekend. That's great news for millions of Americans. So let's get on to the mortgage news and what's going on with, there's a couple things that came out, and I'll explain why. Then we'll get into rates here in a second. So you go through, basically right here, there's a headline. Where is it? Tame Treasury auction. So there was a Treasury auction today, and it went okay. It was a 10-year. No big deal. Tomorrow's a 30-year, so we'll see what's going on with that. So, and then it says, what's up with new NOA/second fees? NOO means non-owner occupied. So investment properties, and then second means second homes. Well, kind of, I'll say not good news is there are a ton of mortgages for rental properties and second homes. Well, Fannie Mae and Freddie Mac are coming back saying, you know what, guys, we have too many of these loans, and we really don't, we're overemphasized in that area, and we need to start cutting back. But because of that, it's a higher risk to us, so we're gonna start hitting these with an extra fee. Okay, so here's how things work. So let's go into this caption right here. You guys watch me every day kind of go through this, what's going on with mortgage rates and so forth. So let me tie these two things together. The MBS market is a mortgage-backed security. That's a bond that trades on Wall Street that is the biggest factor or biggest component of your mortgage rate, okay? There are other factors involved. So let me explain these things to you. So when it comes to rates, you have the bond yields on the MBS, and then there's other things, and we call them loan level price adjustments, LLPAs. Okay, those are add-ons and subtractions to the rate. So let's say the bond yield is X, and now we take that component and we start having to add risk factors or reduce that rate for better quality loans. So in English, okay, so we have a rate. Let's say the rate's 3%. The lower your credit score, the higher the rate. If the property is coming soon, a rental property or a second home, the higher the rate. The higher the loan to value, meaning the higher the loan amount based on the value of the home, the higher it is, the riskier it is for the lender, the higher the rate, okay? All those factors are what we call loan level price adjustments. Factors such as your credit score, your debt ratio, what kind of property it is. Are you looking to do a refinance of the principal balance, or are you looking to pull out cash? Is it a condo or a single family home, a 3-unit or a 4-unit? All of these are factors that are built into the rate. Those are what we call loan level price adjustments. So you have the price, which is the interest rate, and then we have based on the loan levels or the risk factors, you can have a higher rate or a lower rate, okay? That's also when at the end of my videos, I always give you the national averages, and I say, this is the average. If you have a better score or a lower loan to value or things like that, you can potentially get a lower rate because the loan level price adjustment is lower. Okay, so just look at it as a risk factor to the lender. The riskier you are, so let's say you have an 800 credit score borrower and they've never missed a payment ever in their entire life. You take them versus someone with a 600 credit score that every few months misses a car payment, every 6 months misses a credit card payment, so they have somewhat sporadic payments. If you're going to lend them money, would you lend the person that never missed a payment in their entire life? Would you give them the same rate or risk factor as you would the person that every couple months misses a payment on a car loan, a house loan, a credit card payment, or such? So that's where hopefully that you get it. So let's think of you lending it to somebody. You have a relative or a family member that's a deadbeat. You're like, I don't even know if I'm going to get this money back. Well, it's a higher risk to you. Think of it on the bank side. How we compensate for it is we increase the rate to take over the risk factor. So that's that part of it. So loan level price adjustments. So let's dig into, we have the news out about the stimulus package. So they say the Biden stimulus sign feeds risky frenzy. So we're starting to see stock prices go up and oil prices go up and so forth. You're gonna, like I said, I keep saying we're gonna see inflation soon, but let's worry about that when it gets here. So today we saw in the MBS market, it is down 2. Let's say it's 0, because that's not enough to really even move the market. So basically, everybody's sitting on the sidelines right now. A 2 is basically a nothing, a 2 is a nothing, but you can see the Dow, the S&P, and the NASDAQ all up. So we watch this, and the nice thing is, look at the decline that we saw for about 2 weeks. We had an increase in rates of between 3/8 and 0.5% on rates, basically across the board. That's what happened. And then we got a recovery, and then we had a dip. And now the nice thing is we're starting to get a little bit of stability here. I still think this is oversold, meaning I think rates should be coming down, and we should be, we should be kind of, I'm saying at this red line right here. But are we going to get back up to these levels? I don't think so, because the stimulus package is out. Some employment numbers are coming back okay. The unemployment figures are okay. And I'm going to go through that here with you in a minute. So let's go what happened throughout the day today. Is we'll go to the whole day. We started here. We rallied out of the beginning. So remember yesterday we closed the day on a green candlestick that was pretty good. We came out of the gate and rallied. We were way up. And then it eased back, and then we bounced along a little bit of stability. There was a bond auction this afternoon that did okay right around noon, so that stabilized the market, and we kind of ended up right where we were about noon. So I'm okay with this. I don't like ending on a red candlestick. That means there are more sellers than buyers. But tomorrow we have some employment numbers out, and I think a lot of people might have just covered their positions right there and then. Economic calendar. Let's see what happened today. The ECB came out, and they're really not doing anything with their rates. Continued jobless claims. Well, we had less continued jobless claims. Well, that's good. Initial jobless claims, people filing for new unemployment benefits, was down a little bit. We like that as well. JOLT. Here's the crazy thing is, JOLT is an index. So these are people that are out of work or filing for new unemployment claims. Let's look at JOLT. JOLT is an index that shows us how many job openings there are. Let's click this. So consensus was 6.6 million job openings. There was almost 7 million job openings. So we go back through here, 7 million guys. We have 700,000 new jobless claims. There are a ton of jobs out there that need to be filled. Okay, so that's basically what we're saying here. But again, the stimulus package, I'm gonna say it, not trying to hurt anybody's feelings, but if you can make more money staying at home, you're gonna continue to file jobless claims, because why go to work your butt off and make less money? So I'm not faulting people for this. I'm faulting the government for how they set that up. So that's, again, it's not a political channel, but it's going to haunt us in the future. I'm old, I get it. I know what all this political stuff does for us. Short term, it makes us feel great. Long term, it's like drinking all night. You feel great during that time, but then you wake up the next day and for a couple days, you feel like crap. So that's a good analogy, I guess I'll say, with all of this. Tomorrow, we start seeing the producer price indexes. This is one of the biggest things the Fed follows. So the Fed has two mandates, meaning they were created for these two things: to control inflation and try to get employment at its maximum or its peak. Okay, so these last 2 days were very important to the Fed. Federal Chairman Powell will be out speaking next week and kind of giving us some insight on their thoughts based on all of this data here. Okay, so now let's get on to where rates are today. And again, guys, remember, this is the average. You can have a rate out there that's a little bit better than this or a little bit worse than this, based on your credit scores, your loan to value, your type of loan, and all that other stuff. So the 30-year conforming jumbo, FHA, and VA, You got 3.19 on the conforming, 3.15 on the jumbo, 3.26 on the FHA, 2.87 on the VA. Basically, no change since yesterday. I haven't seen anybody nor ourselves have changed rates since yesterday. 7-day delta, I mean, there's a 7-day change. The conforming and the jumbos went up a little bit, probably not really even enough to change anything, but the FHA and VA, they went up an eighth kind of across the board. Now here's where we're starting, these numbers are starting to add up. A 4-week delta means a 4-week change. Okay, in the last 4 weeks, FHA and VA are up almost 0.5% in a month, guys, in a month. This is what spooks the market, is these dramatic changes. Now, if we saw this over a 6 months or an 8 months or 12-month time frame, it would be washed in and really not even recognized. But when you see it this dramatic, it's like, holy smokes, what's going on? So that's what's going on with the mortgage rates for today. Tomorrow we're gonna discuss, and I have it all prepared for us, and I will be posting this. I'm double and triple checking this with underwriting, the forbearance. What's your best exit strategy for forbearances with a conventional loan, FHA loan, VA loan, and USDA loans. So hopefully I have great insight for you tomorrow. So come back tomorrow and find that out. The goal here is to try to give you an exit strategy if you are in a forbearance right now. You're probably going to get a letter from your lender saying you have 3 options. You have 1, bring it current. You have 2, bring it current within 12 months. You have 3, we're going to throw the balance all the way at the end of the loan. Okay. What they're not doing is they're making you make up your escrow deficiency fairly quick, meaning your taxes and your homeowner's insurance. So if you have an escrow, they're going to be reaching out to you for some money. Okay, so what we're trying to piece together right now is the perfect exit strategy for you. So let me paint 2 or 3 pictures here. Let's say your rate is 2.5 and you did a forbearance for 6 months and now you're out of forbearance, but you're at work. You're back to work and everything is okay. What should you do? I would kick the can down the street, throw your deficiency balance at the end of the loan, it's 0% interest, and worry about it then. Okay, that's what I would do. On a flip side of that coin is your rate is 4.875. You were in the forbearance period for a year. Okay, now we look at, and here's where I need you guys to call us. We're going to analyze that and say, okay, you're at 4.875 on your rate. What can we get you? Can we get you 3? Can we add up all that money that you owe and everything and refinance that at that lower rate and give you maybe a lower payment than you're paying now? Plus, when we do this, you're going to be able to skip at least 1 more month, maybe 2. So that might be that strategy. And there's a whole bunch of things in between those extreme variations that I gave you. So what I ask you to do is call us, let us consult you and go through all this stuff. We're honest with you. We'll tell you what we would do. Like I said, if your rate comes back and you're like, Dan, I'm at 199, God bless you, keep it. Don't do anything. Unless your lender, which they're not allowed to do, comes back to you and says, we need $20,000 right now for you to get current. Then give us a call and let us help you get through that. We might even go back and say, you, Mr. Lender, you can't do that, and help you out there as well. So how do you get a hold of us? Well, first of all, 3 things I'd like to ask you. Please don't forget to give me a thumbs up. We're adding about 50 to 100 subscribers a day, thanks to you guys. Click the bell so every time I post an alert, every time I post a video, you get an alert, and click the subscribe button. I'd love to have you as a subscriber. We went from 10,000 to 11,000, we're almost to 12,000 within about 30-day time frame. We'd love to get to 20,000 by mid-year and maybe 40,000 by the end of the year, and we will get there with your help. I trust you on that one. So now, how do you get a hold of us? And you're like, Dan, okay, I want to call you. I want to click something online. I want to do whatever. How do I get in touch with you so you guys can give me this exit strategy? Or if you're in the building a house, buying a house, refinancing your house, what I ask you to do is this: call us. Here's what's happening. I'm going to post this tomorrow. 2 things I'm going to post tomorrow. We have an extended lock period that can lock you from 6 months to a year. I'm going to post the states that we can do those in. We can't do them in every state. We can do them in a whole cluster of states. So we're here to help you guys out. So that's what we're working on there. And I'm also going to post tomorrow a special edition of the forbearance programs and your exit strategies and how you can get into that exit strategy. So how do you get a hold of us? Well, to get a hold of me and my team, you go to therateupdate.com. Scroll down to the bottom. That's our 800 number, 844 844-775-LOAN. It's 844-775-5626. You can schedule an appointment right here, a 15, 30-minute, or 60-minute consultation. Just click it. It'll go in and you'll be registered. We'll give you a call, text, and email back to confirm that information, and we'll be on a Zoom call or a phone call with you to go over any and all your questions with you. If you'd like to email me, you're like, Dan, here's my mortgage statement. Can you help me? Here's my scenario. Can you help me? Please email me. My name is Dan Frio. My email is D for Dan, Frio at preferredrate.com. And then we have a whole bunch of options here that you can do. If you're watching via mobile phone, click here, and you can do the mobile app. This is fantastic. This is actually better than our online system because you track your loan through the entire mortgage process. So that is the #1 way to do it. If you know what you're looking for and you're like, I want to apply and get this ball rolling, hit the apply now button and get started. If you're like, Dan, I really don't know what I want to do. I'm getting pre-qualified to buy a house or build a house or whatever, but there's just pieces of this puzzle I don't understand. You can do one of three things actually. Click here to get a free quote. We'll call you or email you real quick, probably within minutes of you clicking this. If you're buying a house, this is going to ask you about 12 to 18 questions, and based on your answers, it'll allow us to pinpoint exactly what program to qualify you in. This is the same kind of qualification parameters here, but this is for a refinance. So that is it for today. I thank you guys for watching. Our viewers have gone from about 800 a day to about 5,000 a day, and it couldn't be possible without you guys. So thank you so much. Kudos to you guys. God bless. Take care. Have a great day. Enjoy the weather, and I'll see you tomorrow. Bye-bye.